Nigerian investors saw their holdings shrink by 248 billion naira last week, despite the markets remaining positive year to date. That's about 39.95%, and month to date about 4.67%. Consumer goods stocks took a hit, while banking and insurance stocks witnessed increased buy sentiment. Though the all-share index shed 0.42%, the broader market trend remains positive. Let's now quickly take a look at the numbers. We'll start by looking at the all-share index, looking at, of course, it's closing at about 104,647.37. That's, of course, in a shed of 0.42% negative. We look at the market capitalization right now. And looking at the market capitalization, we see it rising about 59 trillion threshold. Of course, there have been lots of talks as regards how the Nigerian Stock Exchange will be able to remain resilient. We saw at the beginning of this year seeing about 54 trillion naira in market capitalization, and now rising to about 59.169 trillion naira. And some investors are hoping that a share of about 0.42% will just be a cameo, even as positivity still remains. We'll look at the top price gainers for last week. That's about 5 top price gainers for the week. We see Julie topping the chart with about 7 naira 86 kobo. NEM Insurance taking the second spot with about 9 naira 65 kobo. International Energy closing with about 1 naira 50 kobo, and Jaiz Bank, including Thomas, seeing a close of about 2 naira 42 kobo and 2 naira 18 kobo. We look at the percentage difference there, plus 46.10, almost same for NEM Insurance with about plus 45.11%, and of course the rest seeing about 22.95% in the caps all the way down to Thomas. We look at the top 5 losers for the week. Now, Julius Berger tops the losers chart, closing up with about 60 naira 15 kobo, followed by Dow Communications with about 67 kobo, and up D Crate with about 4 naira 80 kobo, followed by DCAP and MTN Nigeria. We see it right there, 63 kobo, and MTN Nigeria losing, closing the stock for last week with about 235 naira. And a lot of investors are still looking at this particular stock, that is MTN Nigeria, hoping that some way, somehow, there will be a bit of reprieve for the particular stock. Let's quickly take a look at the sectoral performance for last week. The banking industry continues to top the chart with about 4.19%, followed by insurance with about 8.92%, and oil and gas in just about 0.30%, and consumer goods and industrial goods following with about minus 0.37% and plus 0.57%. And that's about it looking at the stock performance for last week, of course. We go on a short break and return to look at our first discussion that has to do with the total public debt in Nigeria that is said to have reached about 97.34 trillion naira in Q4. Nigeria's public debt has significantly risen to 97.34 trillion naira, a 10.7% increase from the previous quarter. This jump is attributed to government borrowing and loans from international institutions to finance the deficits in the 2024 budget. Compared to 46.52 trillion naira in the fourth quarter of 2022, the Nigerian debt stock has increased by 118%. The debt is split between domestic, that's about 61%, and external sources, gulping 39% of the debt, with a focus on concessionary loans to minimize borrowing costs. The Debt Management Office remains confident in managing this debt, citing planned measures to boost government revenue. So joining me this morning to unpack this is Tajuddin Ibrahim, Director of Research and Strategy, Chapel Hill Denham Securities. Thank you so much for joining us on Business Edge.
Thank you for having me on the show today.
So let's start with a comparative analysis. Given the recent increase in Nigeria's public debt to 97.34 trillion naira, how does this trend compare to historical data, looking specifically at the pace of growth?
So if we look at the pace of growth, we realize that the total debt grew by 110% year on year in 2023 relative to the level in 2022. And it is interesting to note that that is the fastest growth of the total debt of the country in the past 10 years and even beyond. And if you look at before 2023, the average growth rate of our debt is around 16% per annum. So which implies that the 110% growth rate that we saw year on year in 2023 is materially higher than the average level that naturally we should have seen. And I think we should bear in mind that there was a significant level of devaluation in 2023, and that is what, largely speaking, explains the 110% year-on-year increase in the public debt stock of Nigeria as at the end of 2023 relative to the end of 2022. So it is, largely speaking, driven by devaluation of the currency.
Let's put it in a bit of a proper perspective. Of course, the World Bank open data pegged Nigeria's population at about 280 million people. So with this figure as a basis, each Nigerian has a debt burden of about 446,000 naira that ought to be paid. Now, is Nigeria not gradually edging towards the precipice of debt distress and a default, or are there visible ways of paying back and avoiding these and also putting Nigeria within a relative green zone?
Well, I think Nigeria can actually be put in a relatively green zone because if you look at the debt service, if you look at the debt to GDP ratio, what you have just done now is to look at the debt relative to the population. But let's take a look at the debt to GDP ratio, which is currently at around 42.3%. So one thing that we bear in mind is that that ratio could have been a lot lower at around 34%, if not for the impact of the devaluation of the currency that we saw at the end of last year. We remember that we had devaluation in June, and then after that we saw further devaluation of the currency to end last year at around 900 level. That is what, largely speaking, is responsible. When we remove the impact of devaluation, you will see that our debt to GDP ratio is around 34%, which is materially below the 40% benchmark, which is imposed by the government on itself. So which means we are not really faring that bad when you bear in mind that that ratio was driven by currency devaluation. If we remove the impact of currency devaluation, then we are fine. But what is very important is to ensure that we borrow responsibly as a country. We borrow to implement projects that can stimulate economic growth and activities. By then, we'll be talking about borrowings that are not necessarily a major of concern or burden for the country.
All right, let's get it down to the subnational level. Now, we see Lagos, Delta, and Ogun states recording the highest amount of public debt in Nigeria, according to a report. But then we see Ebonyi, Kebbi, and Jigawa recording the lowest debt stock with 70.44 billion naira, 60.69 billion naira, 42.76 billion naira, respectively. Now, looking at the humongous debts that these states owe, are there justifications for these debt portfolio of these states?
I think if we are looking at debt and we are talking about state government, it is very important to bear in mind that the level of debt that you will need as a state will be dependent largely on, number one, the level of projects or capital projects that you are embarking on in your state as a government. And in terms of investing the debt proceeds, it will speak to the level of infrastructure spending that you are carrying out as a state. It will also be reflective of the level of commercial activities or business activities that take place in such a state. So this is what brings my mind to what we have seen with respect to the size of Lagos State as a whole, we bear in mind that this is the commercial center of the country. So it is not surprising that it has the highest level of debt. And I think, the bulk of those, borrowings are being directed towards infrastructure development in Lagos State. And that is what I believe can, drive further business and economic activities to further add to the growth potential of Nigeria as a whole. I think similar thing applies also to Ogun State and also Delta State in terms of economic activities in the southwest. One can say comfortably that Lagos and Ogun State are on the front burner in this case because you have factories in those two cities, particularly in Ogun State, where you are seeing production of manufactured products that are underpinning the overall economy of Nigeria. And it is not surprising that in some northern states, just like Jigawa, like you mentioned, we have low level of debt because I believe that those states need to convince investors more. I mean, debt investors in this case, in terms of why should they come to those states to invest, particularly given the level of security in those states. And I think until when we see an improvement on that front, we may not see so much in terms of debt inflow to them to support their economic objectives. So I'm not surprised about that disparity between those first three states and the northern states in terms of the size of debt. But to my mind, what really matters the most is how efficiently the state government, the state governors are utilizing the proceeds of those borrowings. I think that is very crucial.
All right, earlier ago you talked about, you actually explained how the debt to GDP ratio rose above the 40% threshold. And of course, you said it's not that bad looking at what is being expended in servicing the debts. Now, in the first 9 months of 2023, debt servicing gulped about 66.9% of the revenue generated by the country. And according to the presidency, Nigeria is said to use about 8.25 trillion naira to service debt in 2024. So I'm asking if that is not bad enough, because if we continue to maintain this level of growth with no signs of abatement, how would a sustained momentum mean for the country's debt stock and sustainability, whereby we have a country that when we talk about security issues, it's not really seeing a good or a positive side, and infrastructural development is not also seeing any sort of positives, and the Nigerian government is not really having any form of conduit that is bringing in a considerable revenue that it can use to buff or beef up its budget. So isn't that a big issue for the Nigerian government?
So let's look at it this way. It will be a big issue if we continue to borrow as a government with the current momentum. I estimate that if we sustain that momentum of around 110% growth year on year in our gross debt as a country, we will possibly end 2024 at 205 billion naira. 205 trillion naira as a country in terms of our debt stock. But I think that will be a careless development, and I do not really expect that momentum to be sustained, because if that momentum is sustained, what it means is that we are still expecting further devaluation of the currency. But as we speak, we are seeing some level of stability on the currency front. And I mentioned devaluation of the currency because if you look at the external element of the debt, it is about 31% of the total debt. If you put it in dollar terms, it is about $42 billion relative to $41 billion the year before. That looks like only 2% growth if you are looking at it in dollar terms. But when you bring in devaluation, what you get is about 104% year-on-year growth in naira terms, I mean, for the external debt. So if we move away from those numbers and how they have played out, and we look at, what can Nigeria do with respect to the proceeds of debt, what I believe is that, number one, debt is not necessarily bad. Number two, Debt is good when you utilize it for projects that can stimulate economic activities, projects that can drive economic growth. More importantly, when you spend your debt on projects that can, generate revenue, those revenues that are generated will partly be utilized to service those debts. I think these are the areas
sorry to
that the
cut
government
in.
should be looking into.
Sorry to cut in, Tajuddin, but then every year, every month, we see that monies are being borrowed from these international financial institutions, and when these monies come in, they are not being expended for the purpose for which they are budgeted. We are talking about cases of corruption, budget padding, as it's been alleged, other projects that are said to be white elephants, and other areas whereby we see that these monies are not being channeled for revenue or development or to boost businesses in the country. So if we keep saying that we need to have these funds coming and these funds should be channeled to these areas that would bring about economic growth and revenue, but then we are not seeing the Nigerian government, its ministries, departments, and agencies and other arms of government doing the needful in terms of expending these funds, then what are we talking about?
So what we are talking about is, two different administrations, right? We have the former administration, and now we have a new one. Since we've had a new one, I have not really seen so much in terms of, what can be considered, misdirection of borrowed funds. So
with the buying of SUVs and the payments for the presidential yacht and some other spendings, rehabilitation or refurbishing of the vice president's office and all that, you don't consider those as, spending of funds that are not actually meant for the development of the country?
So one thing that we should bear in mind, I believe, is that, there is always budget for everything, right? The yacht that you talked about now was, under the previous administration, because the news flow that came out much later, made us to understand that it was not in the current administration. The second thing that you spoke about, which is about, the rehabilitation of the VP's residence, I think, one way that one can comfortably read those kind of developments is to understand if it is in the budget or not. What I am talking about is capital expenditure. We need to bring down recurrent expenditure segment or leg of the budget, no doubt. But what I believe that we should be targeting and focusing on and questioning the government on is the capital expenditure leg of the budget. And when we are in a country when you are not really generating much revenue, you have to borrow to execute your capital expenditure. And in borrowing, what really then matters is that you really direct those borrowings to the projects that you set out on day one to execute, not for the borrowed funds to flow into financing the recurrent segment of the budget. If we are talking about that, then you are spot on. For us to really question the government. But if they are directed towards the right infrastructure, then I think they are working in the right direction. So we also need a lot more transparency, because we have to work with whatever they provide to us. We have to be careful around things that are not clear enough to the public. You talk about budget padding, and I think that was cleared by one of the senators, saying that the entire budget is divided into two. The MDAs have their own on the one hand, and then the FGN has its own on the other hand. Okay. What I believe really matters is transparency and accountability as well going forward.
All right, Tajuddin Ibrahim, Director of Research and Strategy, Chapel Hill, Denham Security. Thank you so much for sharing your thoughts with us.
It's my pleasure.
The recent fluctuations in Nigerian Naira exchange rate and putting a strain on businesses across the country, raising operational costs and shrinking profit margins. Compared to Q3 2023, the Naira's depreciation to about 1,900 Naira at some point, from 700 Naira to $1 in Q1 2024, impacted businesses in several key areas. Now, the cost of raw materials and machinery often imported, rose significantly, and some companies are exploring local substitutes or adopting more economical packaging solutions. And also, the cost of international freight has increased due to the exchange rate, forcing businesses to look for ways to explore alternative shipping routes. So this morning, Adeola Oluwatemiloran, CEO Oretide Foods, joins me live in our studios to help us understand how this is affecting Nigerians and those who own businesses in the country. Thank you so much for joining us on the show.
Thank you too for having me. Thank you for having me.
So as a vendor of both raw and processed consumables, how did the exchange rate fluctuation affect both import and export of commodities, most especially when the naira rose on a steady to a peak of about 1,900 naira to a dollar?
Concerning import, it has affected us a lot because of the import we do on, like, for example, stockfish. Stockfish is brought into Nigeria from Norway. So the exchange rate that made it, if we had been able to import 2 containers before, at the moment now, the only thing that you can import is maybe half a container or mostly one container. So it has affected us drastically. And the prices has gone really up. Like a year, 2 years back, we used to sell stockfish for, I think, 6,000, 9,000 naira per kg. Now it's about 24,000 naira per kg. And now it has somewhat found its way into the luxury aspect. So everybody cannot afford that again. And then concerning exports, international freight has really gone up, thereby affecting the rate at which we used to export compared to a year back, compared to now. So it has affected both imports on my side and also exports on my side.
So in times where you would have to probably reduce the quantity of what you have to import, most especially for the local markets, how bearable or unbearable is the situation, and what is the disposition of your customers when they see that probably in some times would have to reduce the quantity just to make up for losses at probably profits, if possible, in some instances?
Well, first of all, demand has really dropped. Demand for imported product has really dropped. Like I said earlier on, for stockfish, let's say we used to sell like 2 containers in 2 months before. Now we have 1 container still in stock for about 3 months because of the high cost. And we can't reduce quality because it is an imported product. We can't reduce quality, we can't reduce quantity as well. So we just increase price. So people that can still afford, still buy. People that are traveling out of the country or outside the country, maybe they have their relatives coming over to still buy. But really, demand has really dropped.
And so we understand that some people at this point will look for cheaper options. So how do you try to still stay in the market? Because I know you have competitors, and if they have to shift their focus to other people that probably would have them shed a little sum, littler than what they would pay you, how do you manage that kind of situation where you lose your customer base?
Like at Oretide Foods now, about 3-4 years back, our major product was like stockfish, but because of the increase in dollar-naira rate in recent times, so I had to look into our local indigenous fishes that are not too known. So we go to the fishermen, get fishes from them. As long as I can give you options. This is stockfish. This is our local fish, OJ fish. This is Palamo fish. So people have a lot of options. We have a lot of cheaper options, and they also the panla that is imported into Nigeria, to panla fish, Titus, Kote fish that is imported into Nigeria as well. The price has really gone up. So we have to give different options, a lot of options, so that you can, at least no matter how small the money you have, you can always have something to buy from us.
It's quite interesting that you keep mentioning the fact that the prices have gone up, which of course would be realistic because you're a business owner. But then we've seen the Nigerian naira appreciate to about 1,400 naira, 1,500 naira, both at the official window and the parallel market. So don't you think that at this time there should be a reduction in what is to be paid in terms of freight costs at the ports, at the terminals? Don't you think the fees and what is to be paid for imported goods should reduce?
Yeah, if it keeps going down like that, then definitely prices are going to come down. But for we that we import, like I've imported a container of stockfish, like when the dollar was around 1,900 and it is now at 1,400, I will still want to sell off. Then when I'm doing my next import, then I can now bring prices up. But for now, if prices keeps coming down, we have no option than to also bring down. And also freight prices are not coming down, DHL and the rest of them. Nobody's coming down with freight prices because the customs, they are not bringing, they keep increasing clearing rate on a daily basis, so it doesn't come down for export. But if the dollar rate comes down, then we can now reduce price as well.
Okay, so there's this part I'd like to get clarification from you. Now, according to what we understand, it's been said that if the naira is weak, food merchandise will be cheaper to sell overseas, but that will make it more expensive to buy some commodities for the local market. So I'd like you to just help us understand how true is that and how it works.
Yeah, it's really true. It's really true because the food that you can just afford to buy normally has become a luxury product, and people that are abroad are earning in pounds and in dollar, they can afford, because dollar to naira or pounds to naira is now 2,000 naira, so they can afford to buy it. So when they want to export, they export all the luxury products out, and we are left with nothing else than to surface whatever we have on ground here. So that's why it's going to keep going up.
Oh, okay. All right. So many are actually urging a focus on boosting domestic production and reducing reliance on imports. Of course, you are the one who goes out into the markets looking for alternative sources whereby you can have merchandise that the consumers can purchase. Do you think that will go a long way in reducing the demand for the dollar, probably reducing the pressure on the naira?
Yeah, it's going to really, really help the naira appreciate more. If the government can at least, our fishing department, I don't know what it's called, they can look into the fishermen, make it more commercialized, and where we can have fishes all year round, we can have crayfish all year round, then there will be no need for us going to Norway to bring in fish again to Nigeria, because we have enough water, enough fishermen. It's just that they don't have the government backup, and they don't have the facilities to be able to have fishes and crayfish and crustaceans all year round.
Okay, Adeola Oluwatemiloran, CEO, Rate Today Foods. It was nice talking to you. Thank you so much.
Same here.
Over the past 5 to 6 years, Nigeria's banking sector has experienced significant growth, evidenced by the NGX banking indexes of 114.89% surge in 2023. Despite challenges from financial technology firms and regulatory hurdles, banks have shown resilience, maintaining market capitalization, revenue growth, and transaction volumes. Coupled with this is a notable trend in the rise of female executives as managing directors and CEOs in banks and bank-hold companies, highlighting the industry's acknowledgement of female leadership and importance. Now, this morning, I'm being joined by Kikelomo Shodeko, a risk consultant, and she will be helping us understand this better. Thank you so much, Kikelomo, for joining us.
The pleasure is all mine. Good morning.
So we've seen the growth in Nigeria's banking sector. Does the rise of female managing directors and CEOs in the sector excite you? And does it reflect broader trends in organizational leadership?
Certainly, it's exciting to see female leadership in any role in general. And it just shows that something is shifting. That is, the people are getting interested to see that women can actually, do their thing when it comes to leadership. And not only are they leaders, good leaders, they are able to transcend businesses from small to great. So that's why we noticed that most of this this shift in leadership style, where we are bringing in more women, is that these women are well trained. They have the capacity. They've shown resilience through the years. They are family. They're women with children. They're women that have it all, if I will put it that way. And today they're showing their abilities in spite of everything that is happening in the country. And if I will mention it also, we're seeing a lot of profit in the banking sector, and I can give kudos to the females in that sector. They are the reason, I believe they are the reason why we are seeing that kind of growth in the banking sector today, compared to what was happening in the initial stage, where women were considered for those big roles, especially in the board of directors and also managing the whole bank as a whole. So I would say kudos to the women. They are doing an exceptionally great job. And for them to be able to still be standing despite all the challenges they might have faced. So yes, I'm very excited. And it shows that something is shifting somewhere. And I hope it keeps shifting in that way. Thank you.
You talked about how resilient, industrious, and resourceful they have been. I'd like to find out how have female executives contributed to the remarkable growth? I'd like you to be very critical in terms of what they've been able to provide when we look at Nigeria's banking sector in the last few years.
Yeah, so first and foremost, the first thing is, the woman is seen as someone that can't do much. Yes, in the homestead, she's seen as someone that can handle the homestead. And I do believe that the female capacity to handle the homestead perfectly makes them become very, I would say, very versatile, right? The ability to handle the homestead, that is the kitchen, the children perfectly, brings them into the work environment, and they are able to be that coordinated. We all know generally that women are seen as very coordinated. Psychology tells us that they are very coordinated. We even had the popular test online, where girls were put together and boys were put together. And we saw how immediately the girls were able to, arrange themselves and gather themselves and be able to do the right things to help them move along, right? So we can see that, and we can see how they bring in their ability to handle difficult situations into the work environment. We can say what we can about all these people. We can say, oh, female bosses, they are nasty, and all those things we generally say. But I will say, through their resilience, they've been able to take the asset of each of the banks, these banks that have had females. We noticed that the growth has grown from 9 banks that used to have female executives to 11 banks today, where we have more banks bringing in more female managing directors. And today they are doing exceptionally well. So I would say it again, no matter how critical I get to the nitty-gritty of it all, we see a change in the dynamics. And so, for example, another change I will mention is that for Sterling Bank, they are bringing back mothers, mothers that have been at home taking care of children. They got out of a job because, they had to go on maternity leaves, and some of these companies are not so open, to allowing women have a kid and still be working. So some of them were out of a job. But see what Sterling did. Sterling says, you know what, mothers, come back to work. There's an environment where you can have the best environment for your mothers. We see the same thing in GT Bank. At the GT Bank HQ, we have a whole floor for mothers with their babies. So it's just a dynamic that I believe is working exceptionally well for the women.
So yes, you mentioned a couple of new generation banks, and some industrial analysts or financial analysts say that we do not see women rise to the position of leadership in conventional banks. So are there any notable patterns in the types of banks or financial institutions that have appointed female managing directors and CEOs? Or would you say that this revolution is something that cuts across board, or probably all sectors of the economy?
No, it does cut across, because as we all know, the famous Madam Ibukwan Woshika was in charge of First Bank, and First Bank is one of the oldest banks in Nigeria. So she was in charge of that bank for a long time. So it's been just a new generation bank thing. No, certainly not. And if we remember, most of the old generation banks had to integrate into the new generation bank. So banks are not in silos as we would like to think, right? So we will see that. We will see the pattern changing, because the moment the older banks begin to bring in board members, we see board members coming in, we see females being made managing directors, that will change across board. So I think it's across board. I just believe so much that it also maybe I would give kudos to the CBN in this way, because also the CBN acts as a private entity, in the sense that it created a policy that would open that latch for the women to be able to come in. So 30% for women to be part of the board of directors, and 40% for women to be in the managerial cycle of the bank. So for me, that in itself is exceptional. For the CBN to create a policy like that, and those are the kind of policies that we need, that will cut across board, that would make it possible for these wonderful women that we are seeing today. And I can tell you, they're geniuses at their jobs. They are exceptional at their jobs. And for them to be climbing the top today is not shocking. It's just it was just a matter of time for them to be here. And I might even add that thus far, we've had our financial heads have been females, and they've been exceptional too, right? So the Madam Okonjo Iweala, she's a top financial person, right? We even have Dr. Ola Brown, who was a medical doctor and now a PhD of finance. That's amazing on its own. She's a venture capitalist. Okay. So and that goes on and on and on. So yeah. So definitely has to do with some policy, adjustment by the major bank, that's the central bank, and also the banks also being inclusive, opening themselves up to allow this kind of change to happen in the bank. Thank you.
Okay, before I let you go, Kikelomo, now aside the demands of motherhood, are there other challenges that female leaders do experience or face while navigating the workplace dynamics and environments mostly dominated by the male folk, and business ventures that investors look at and might have a bit of disposition or predisposition to it because it's being led by a female or by a woman. And when we have situations like that, aside policies and an inclusive environment or measures to help these females acclimatize and have them do their job better, there are other areas whereby these issues or challenges can be dealt with.
Yeah, there are many challenges. One of it is education. We see that more and more children are out of school, and the female is more affected. We have child early marriages where the woman is not allowed to become who she is supposed to be before she is sent off into marriage. So that's just two of the major challenges that are just there, right? There are so many limitations that even our constitution says that if a foreign person, a foreign national marries a Nigerian woman, he's not a Nigerian, right? That's odd, So there are so many limitations that are right there in between. Yes, it's great that on a broader level we see how the banking sector is showing the geniusness of the female folk, right? But underneath it all is still those things that need to be changed at the bottom, where females have to go to school. Let there be more opportunities for women as they come up in different parts of the country. It depends. The predisposition of each region of the country is dependent on how the female child is seen. So that's part of it. So those are the challenges. They're right there waiting for us. But thus far, it's still kudos to the female folk doing wonderful things in the banking sector.
Of course. Kikelo Moshideko, risk consultant. Thank you so much for talking to us.
The pleasure is all mine. Have a good day.
And you too. And that's it on today's edition of Business Edge. Do not forget that you can visit our social media handles. We are at News Central TV, and that cuts across all platforms. You can visit our website, www.newscentral.africa, and equally download our mobile app on App Store and Play Store. Until next time, I am Lekan Onabanjo.